My name is Isma, as usual. In today's video, we're going to look at the answer for a question, or for a question as to which specific periods of different moving averages am I supposed to use. Because one will come and ask, am I supposed to use 10 and 40? Am I supposed to be using 1 and 2? Am I supposed to be using 250? Now, the answer to that question is going to be in this very video. Like, share, subscribe, and click onto the bell such that you're at least notified for every video that we release on this channel. Now, what is a moving average? What is a period? What is the closing price? Are some of the terminologies that one who is a newbie into this business will definitely have to ask. First and foremost, I did release a video specifically looking on how we can supposed to trade with the moving averages. And if you really missed out onto these particular videos on how you can trade the moving averages, click up and you will definitely view that video, help you on how basically you can trade with the moving average. Now, after finishing that video, come and continue on to with this video and basically be in position to know which specific pairs, which specific moving averages are you supposed to be using. In other words, which periods or with the specific moving averages that you are using, because when you are trading, you can either be using the exponential moving averages, you can either be using the simple moving averages, or you can be using the weighted moving averages. Now, first and foremost, what's a moving average and how does it come to be or exist onto our chart? Now, this is the moving average which we are currently seeing. For instance, let me first get onto this tool to help us on basically show to us when we are going through each and everything in this video. Now, this is the moving average. This red line that you see that continues, this one, it's the moving average, and this one is also another moving average. Now, what is a moving average and why is it a line? First and foremost, when we look at what we see in our video, it's that a moving average is basically a line, okay, though not a straight line, but all we know it's a line. And how comes it's more of a rope, or it's definitely keeps turning and having curves in it? It's because this line is generated. For instance, we get let's say each moving average has gotten a period. This period is the number of candles that are being acted on, that are being used as the sample spaces to calculate the moving average. In other words, this is what I mean. For us to come up with this line, let's say if we have a period of, let's say, 2 candles, let's say a period of 2. The period of 2 means that, as we all know, the equation of the moving average is sum of items out of number of items. Sum of items, now this time round, as we all know in our simple mathematics, sum of items out of number of items. This time round, we're going to be having the closing prices. For instance, let's say 5, and then if we have 5, we get the prices of individual. For instance, we get, this is candle 1, this is candle 1, this is candle 2, this is candle 3, this is candle 4, and then this is candle 5. Now what we do, we get their closing prices. If we actually supposed to, when you draft a line, for instance, when you draft a line here at this particular candle, sorry, let me draft a line. When you draft a candle at this particular candle, it will give you this price. So you get this price, you add it with 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 this price. At the end of the day, you realize that you get various prices. Now, this is what we get prices of each of these 5 candles. Then what we do, we divide them by their number. So that's why we say it's a moving average, because it's gotten from an equation of the moving average. So when this previous candle does closes, then the next candle opens and closes, this definitely will mean that we shall have to drop the other candle. And when we keep on getting every new candle that opens, we still repeat the same procedure, of course, by dropping the last candle, because we have to keep the number as 5. We drop, we drop, we drop, we drop. When we keep doing that, you realize that we shall actually be having various points, probably. We'll be having various points of various moving averages, and when you join these points, you're coming up with something more of a line. Okay, more of a line, hence the moving average. So that's how it comes to exist. But good that we have the information, good that we have the technology of the MT4. Now you're not supposed to actually calculate this by yourself and come up with this line. Now it's the system, it's just a matter of you. Now let me first rub whatsoever I've put here. Let me rub whatsoever we have put here. Fantastic. Now, when it comes to the MT4, it's just a matter of you coming where we have our indicators. Look for the moving averages. Okay, that when you click on when you reach here, it's just a matter of you putting the period of 5. Definitely you realize you have whatsoever will have been working upon, and you definitely be in position to see this other line, so which you would have manually worked upon. So that's it. It's as simple as that. Now let's move on to there. I was just showing you how we come up with the moving average and forth. Now for those that are already trading with the moving averages, know what moving averages are. Let's look at the I believe you have a question: which periods am I supposed to be using, and how many moving averages should I be having on my chart for me to participate, or for me to use my strategy of the crossover or the impulse pullback strategy? Because I believe I released particular specific videos looking at these various types of strategies when trading. Now during this time is when you realize that you're actually experiencing or having so many people meandering from which specific periods of various moving averages are supposed to be using. Remember, when the previous video, what I said or what we looked at was that you can trade with either 2 moving averages or 3 moving averages, which we call the double crossover method and then the triple crossover method. Now, and you can as well use 4, but then what's the criteria of you picking which moving averages? First, let's assume, because we have the standard moving averages, for instance, we have standard pairs. For instance, we have sorry, let me just do what? Let me just type it. Let me just type the specific pairs of periods we actually supposed to trade, because just like I said earlier, you can actually be there and be like, should I choose 10 and 50? Should I choose of course the periods? Should I choose 5 and 20? Should I, which ones are they supposed to be am I supposed to be using? Now the answer to that is in this video. Let's first look onto the standard periods of specific moving averages that we're supposed to be using, and then I'll give a standard of 3. Now by 3 it means that you're definitely trading with 3 moving averages, and then this is the triple crossover method. So the triple crossover method can either work as double crossover method or the triple crossover method. So when it comes to the double crossover method, you definitely just have to pick the first one and the last one, or the smallest and the biggest moving average, okay, for you to work as 2. So you can either use them as 3, or you can either or you can either leave them as 2. So by 2 you definitely have to pick the smallest and then the biggest. Now let's look at the biggest. Let me just list down the pairs, the standard pairs that we do have, that you can literally pick from, and then from these pairs we shall realize that as they are picking these pairs, they definitely had something in common, which we definitely also have to follow when we're actually picking the specific moving averages to trade with. I'm not saying that if I'm using moving averages of 10, 25 and 50, that you should also use them. No, for you can wake up one day and be like, man, me, I'll be using 49 and 18 moving average, or I'll be working with 25, 50 and 100 and fourth, or 200, 150. Okay, for those that are already trading with this, definitely know what I mean, what I do really mean. So for instance, we have the first standard pair is definitely 25 and 50. That is the first one. That is the first one. So if you're trading with the moving averages and you definitely don't know what exactly you are supposed to be doing, then you can choose from this standard pair. Again, let's look at another pair where you can, another standard pair from which you can choose with. You can as well also choose 4 and 9 and then 18. So this is another one. Let me arrange them properly. Yes, that's another one. And again, you can also choose to actually have 50 and then 100, then also 200. Okay. Let me actually do what? Sorry. So basically these are the most common ones, but when you definitely look at this, you realize that it's just a matter of you picking what you want to be the base. Okay, if you want the last point to be the last moving average, in other words, what do I mean by the base? By you working with such a pair, let me choose this, regardless of which time frame, because this can however work with all time frames. It can work with 1 minute, it can work with 5 minutes, it can work with 13 minutes, it can work with 1 hour and forth. It can work, all of them can work on all various time frames. Why? Because some of them will be like, now for me, I'm working with relatively smaller time frame, and then am I supposed to be using the same as someone trading with an hourly time frame? Now this is it, because when you are trading, you're looking at a 1 minute chart. Okay, you're looking at a 1 minute chart, and definitely whatsoever averaging comes into consideration, whatsoever how many periods that you are working with, they will definitely be considering the type of chart that you're in that particular time frame. Now when you're using this, let's say in a weekly time frame chart, you're actually saying that this is working as your base, okay, and then this is working as your crossing moving average. In other words, this one is the one that is already supposed to be crossing the 50, the 200, the 50 is supposed to be crossing the the 200, and then as either a trigger for a short or for a buy. When this crosses this coming from above, okay, and crosses this, okay, then definitely this indicates a what? A short. In other words, a sell. So again, it will be the same 50 that will again come and cross this very line of 200 to trigger for a buy. So the 50 becomes a triggering or a signal line. In other words, a crossing line. For it, it's the one that crosses, because this will definitely work as the base. The same applies to this, the same applies to this. Okay, so if you really missed out on the previous video showing you how you can trade with the moving averages, you can definitely first go watch watch that video before you come onto that. For those that already following, you can definitely just proceed, and you definitely know what I'm basically looking at and what I'm talking about. Now, so the most important aspect here is for you to choose this point. Which moving average do you want to be the base? In other words, the base is always that point or that moving averages, that moving specific average, that when market reaches that point, it's definitely a clear signal that really this market has definitely changed the direction. In other words, it's working as the base, it's working as the support. What do we mean by this? It's working as the support, and when the 50 or the crossing moving average crosses it, it definitely shows a clear change in the direction of the trend, and definitely this will clarify that the market is actually turning the direction. So when choosing the base moving average, you should be it should be not definitely be easier to reach. Okay, it should be definitely a bit far, and should be the biggest as compared to the crossing moving average. Okay, so let's assume, if definitely I'm not certain, I don't know these standard pairs that we really do have here, I don't know them. For instance, when I first remove that, let's assume if I definitely don't know these standard pairs, I don't know about the 200, 150 pair. Okay, that I call them pairs, it's because they are specific pair or pair of periods we're supposed to be using when we are trading. I don't know about the 4, 9 and 18. I don't know about the 10, 25 and 50. Now we're looking at the criteria of you basically choosing the biggest. Of course, definitely you know what you want. You can definitely, if you really certainly not sure of which line or which moving average that you're supposed to be choosing to work as your base, you can always just choose any time frame. Okay, sorry, I missed out on something. Now when you're choosing this on the weekly chart, you will definitely be saying that for every 50 candles, meaning that for every 50 weeks, this is when you expect the market to be moving. In other words, when you're using 250 on a weekly chart, yes, it works, but it will not be more effective, because then you'll have to wait for a couple of months or years for the market to reach out to cross. And when they cross, for them to cross again, you definitely have to wait for a couple of years. You should also put this into consideration when you as well trading relatively bigger time frames, because these standard pairs are also sensitive when it comes to both lower time frames and higher time frames. So you should also put that into consideration when choosing the right moving averages to trade with, or the right periods to trade with for specific moving averages. Okay, so I wanted to put this clear on air, such that you definitely will know when you're choosing and you're trading with relatively bigger time frames. You should definitely do not choose your base to be definitely something big, for instance like 200, like 100 period for the specific moving average, because when you do that, it will work, but you definitely expected to wait for quite long when you are trading in such a time frame and choosing such big periods or bigger periods of the specific moving average that will definitely work as your base. Again, when the time frame is relatively too short, okay, when you're into that time frame, you definitely also have to put into consideration when choosing relatively very small and very big periods for specific pair of EMAs or moving averages to use. So you have to be that. Now, if you definitely don't know which pairs of moving averages you're supposed to use, you just go on and try out on several moving averages, the ones that you see that are definitely not crossed so easily. In other words, you can try out on 20, 50, 60, 70, 100 dependingly, and you definitely have to look onto this chart and see that whenever I use this moving average, it's normally not almost crossed, and when it's crossed, the market is definitely changing or turning or bouncing off to a certain direction or to the same direction dependingly. So it's important that when you choose this particular period that you definitely didn't. I'm not saying that we should all be working with this. These are the standard ones, okay? But then I'm saying if you really don't know what exactly we don't know about the standard pairs, or you're also looking forward having your own personal pairs, okay, of periods of moving averages to trade with, you can definitely just go onto the chart, try putting various moving averages that is you expect to work as your base, and by so you definitely have to look at or look for those points, those moving averages rather, where the market is not closing frequently, is not crossing frequently, and then when it's across, the market is definitely changing the direction, or when the market is really bouncing and you find this line more effective, then take this. And when you take it, then this is the beginning part for us to get the various pairs of periods for the particular moving averages that you are actually supposed to trade with. Now, let me give you an example. When they are picking these standard pairs, okay, of course, when they're picking these standard pairs, they made sure that if this is 200, so whatsoever base that you pick here, let's give it X. So whatsoever base that you pick here, let's assume X. We don't know about the specific pair, specific period of the moving average you chose. Okay, make sure to get the mid, the next one, it should be half. It should be half of this. For instance, if you chose let's say 50, no, let me take 100. Okay, let me take 100 because it's easier and simple mathematics to use. Let me take 100. Let me just type it. No, okay. Let me say 100. This is 100. So to get the next one, it should be half of this. In other words, the next one is supposed to be what? 50. Okay, and then the following one, or the preceding one, the lowest, should definitely be half of the moving average. In other words, this should be 25. Let me make it clear. So this will definitely be 25, 50, and 100. So we're looking at someone who really never knew which specific pairs of periods for the moving averages to use. So get the biggest, because I've just explained the criteria of picking the best. So get the best. The best will give you this. It will again give you this. Okay, so that's the easiest way. However, because we're not always supposed to use consistently the same periods over and over, get onto the chart, choose the base. By choosing the base, you're looking at that point or that period of the moving average whereby it's not crossed so frequently. And if it's not crossed so frequently, again, put it into consideration that whenever there is a cross, the market is actually turning into the market a different direction. And then after so, if not so sorry, then the market is either bouncing off that point or that period of the moving average that you have chosen. Because today the 10, 25, and 50 may be effective, probably, let me say, in the 15 minutes chart, but then when I look at it critically in the 4-hour chart, it's definitely not making sense. Then that's why I decided to come up with this video to make this very clear. Okay, and give you the criteria for you to choose the best pairs of periods for the particular moving averages that you are using to work for you effectively Okay, like, share, and subscribe. Okay, simple. Get the best. The best will give you the preceding, and then also the lowest. Okay, or the turning point. Then if you're actually trading, or you're only interested with trading with 2, it still gives you the criteria. First get the 3 of this, then pick the base, and also pick the what? And also pick the crossing line. In other words, this should be a quarter of the base, and then the middle line should also, normally we call it the alert line, because it alerts us when the market is yet to cross. Because for this to cross this, it has to first cross the 50 and then the 100. So when I look at it crossing the 50, that's when I become it alerts me that now anything is yet to happen for you to cross the 50, and definitely I'm experiencing any cross within the markets. So definitely that's how it means. That's how it basically means. In other words, the simple formula is when you have the base, for you to get the crossing line, if you're definitely working with the 2 moving averages, then the crossing line should be a quarter, and then the middle line should be half. So when you get the same applies here. Okay, when you get this is the 50, and then a quarter of this, a quarter of 25. If we were to get our calculator, what is a quarter? A quarter is 1 out of 4. Wait, hold. Let me prove. Let me have some proof for you. 1 divided by 4, then times 50. So this was supposed to be 12. Okay, this is supposed to be 12, and definitely this. So that's it. Okay, that's it, and that's how it works. Okay, effectively and forth. So choose from this, and you definitely will work out for you. Thank you very much. When you also look at this 50%, this is 25, 0.25% of 200, you get 50. So that brings out clearly, and then here as well makes it out clearly. Thank you very much. Like, subscribe, and share. Have a great day. I sign out.